Welcome back to the Energy Signal Podcast, Episode 9, your weekly roundup for the latest trends, policies, and market movers shaping the U.S. and global energy landscape. I'm your host, Josh Lefebvre, joining you from the energy capital of the world, Houston, Texas. We are recording this episode today, Sunday, December 7th, 2025. And for those of you who might have been wondering why there's been actually a close to a 2-month gap between episodes, the truth is that I've just gotten very busy personally in both of my businesses. So I took a little hiatus from recording these. But yeah, we are back in business and you should be expecting a new episode every Monday of the Energy Signal podcast. That is my guarantee to you. In today's episode, we'll be discussing how both oil and gas markets surged this week, with natural gas hitting its highest levels since 2022. We'll also be exploring two major U.S. energy deals, including Targa's plan for expanding its footprint in the Permian, and then also Constellation securing approval for its Calpine acquisition. We'll also be looking into how tensions are escalating near Venezuela as the U.S. military movement revive questions about access to the world's largest oil reserves. And then finally, we'll take a look at how the renewable sector continues to push back hard against federal policy shifts. Make sure to stick around. You're not going to want to miss this one. This episode of the Energy Signal podcast is brought to you by StageTracker AI, the real-time frac intelligence platform that's powered by AI agents that help engineers and operators stay ahead in the frac game. Whether you're trying to optimize pump schedules, reduce NPT, or benchmark crew performance, StageTracker gives you the live view of what's really happening, stage by stage. No more waiting on the post-job reports to know if you're behind. Learn more at stagetracker.ai because every minute counts on the job. All right, on now to commodities. Well, oil actually rose from $58.94 to $60.08. This was a small 1.93% increase. This increase came after the U.S. Fed announcing it's expected to cut rates yet again. This also likely ties into some of the geopolitical uncertainty that could limit supplies from both Russia and Venezuela. Natural gas, on the other hand, is on a complete bull run at the moment. It started off the week at $4.87, rising up to $5.29, an 8.63% increase on the week. This is the highest gas has been since December of 2022. And this comes after forecasts of frigid US temperatures that are expected to boost natural gas heating demand. And I don't know about you, but I wish I had invested into natural gas 3 months ago. I mean, with these data centers and then the cold weather that we're getting, and I can attest to that, it has been freezing in Houston. This is the coldest it's ever been since I got here. So it only makes sense that natural gas is going to go through the roof. On now to our big US energy stock players. Exxon, ticker symbol XOM, they jumped slightly from $116.10 to $117.40, a slight 1.12% increase. Not much going on there. Chevron actually fell slightly from $151.75 to $150, a small 1.15% decrease. And this fall was actually surprising because Chevron had some interesting announcements over the last week. First of all, the Chevron Australian arm got approval for a $2 billion investment into stage 3 of the Gorgon LNG project off the coast of Australia. And of course, this could boost its long-term LNG output and strengthen its global gas footprint. So you would think that this is a good thing. In addition, Chevron also said it plans to spend anywhere between $18 to $19 billion in 2026, focusing heavily on US production and offshore development. I mean, this level of investment from Chevron would suggest that there is confidence in the long-term oil and gas demand. So again, that drop was surprising to me. Now, also surprising is that Phillips, ticker symbol COP, they jumped up significantly from $89.13 to $93.69. This is a 5.11% increase. Now, it's unclear what exactly caused this surge in the stock price, but if I were to speculate, I think it would have something to do with some of the recent announcements that ConocoPhillips is actually planning on raising their production in this quarter just slightly, as well as they've they've significantly cut down their operating expense. It's important to note, though, that yes, despite this monster week from ConocoPhillips, the stock is still down 8.3% year to date. On now to our deals and drills for the week. Targa Resources, ticker symbol TRGP, a Houston-based midstream company, announced it will acquire San Antonio-based Stakeholder Midstream for $1.25 billion. Now, this deal would provide Targa with an additional 480 miles of gas pipelines, processing, and crude gas storage and treatment capacity, specifically in the Permian Basin. Now, a spokesperson for Targa stated that this acquisition is designed to capitalize on rising natural gas demand, including growth driven by AI data centers and LNG infrastructure expansion in the region. This sounds like a very smart deal. In other news, Constellation Energy Corp, ticker symbol CEG, they reached an agreement with the U.S. Department of Justice and got regulatory approval for its $16.4 billion acquisition of Calpine. Now, of course, this has been going on for a while. For those of you who don't know, Constellation is based out of Baltimore, Maryland, and the company provides electric power, natural gas, and energy management services. Now, upon reaching this deal, Constellation agreed that it must divest 4 power generation assets, and this included a natural gas plant near Houston and several assets in the mid-Atlantic and Texas regions. And this, of course, is to mitigate antitrust concerns. But this deal is expected to go through. On now to energy geopolitics. And this, of course, covers some of the biggest energy stories across the world and how they are shaping our global geopolitical landscape. Now, the biggest story of the week, and of course an ongoing one, is this whole Venezuela tensions with the US right now. And according to a recent CNN report, the US military is building up significantly around Venezuela, and this has escalated sharply. Now, this is prompting President Nicolas Maduro to claim that Washington is only doing all of this because it seeks to control 303 billion barrel oil reserves. Now, this, of course, is the largest proven crude stockpile on Earth. Now, the U.S., of course, denies that oil is the motive, and they're actually framing their actions as they're trying to halt migrant flows, trying to halt drug trafficking. But it's hard to ignore Venezuela's oil dominance. And really, this is such an important stockpile for any future regime. Now, despite the vast reserves, Venezuela's oil output has collapsed over the last couple of years. And this is because of sanctions, because of mismanagement, decaying infrastructure. But this Venezuela oil particularly is very sought after. It's sour crude, and it's vital for U.S. refineries, and basically it's big in diesel. So this particular reserve is very strategic, and it's hard to see that this is not ulterior motives around this. Now, Venezuela's oil sector could reshape the global energy flows. They could provide an alternative to Russian heavy crude. They could stabilize prices right now, and basically they could attract massive Western investments, basically restoring production back to its former levels. So it'll be interesting to see how this plays out. On now to renewables and green energy. And I wish I had some good stories for you, but unfortunately the bad news keeps piling on for anybody in the renewables sector. Our biggest story of the week comes after more than 140 US solar companies went to Congress and urged them to overturn Trump's policy that is effectively freezing any new permits on green energy projects. Basically, any new permit is required to get a personal approval from the Interior Secretary. Now, this potential freeze has put close to 500 solar projects at risk of delay or just straight cancellation. In other news, the administration has removed the word renewable from the National Renewable Energy Laboratory. That's based, of course, in Colorado. And the rebranding, it's mostly seen as a symbolic de-emphasis of wind and solar research. And this, of course, comes as the new administration really wants to push and focus towards fossil fuels and nuclear as the priority. So no surprise there. In And that wraps up our episode for the week. And I think the major takeaways from this week are it's nice to see oil have a small resurgence, but I've been looking at a lot of the long-term research and it doesn't seem like 2026 is going to be a great year for oil. In terms of the overall landscape, it does seem like, things might get better into 2027. I've looked at the 20-year, 40-year, 50-year charts, and oil is going to continue to play a major role in society for the foreseeable future. But really, natural gas, that is going to continue to grow incrementally. So yes, natural gas above $5 on the Henry Hub scale, it might seem like it's a lot, but I think we're just at the beginning. And I think really the need for natural gas is going to continue to increase. So I think production will, continue to see new records in 2026, but probably more at the, some of the basins that are more gassy as opposed to oily. And then of course, with everything that's going on in Venezuela, if the US somehow gets access to that reserve, that could completely topple the current energy geopolitics, hopefully in the US's favor. So it'll be interesting to see that play out. But again, for everybody who's watching, thank you so much for tuning in. Until next week, this is the Energy Signal Podcast signing out.